There is a lot more happening on social media platforms these days than the sharing of messages, family photos, and videos. It has grown beyond being a platform for light-hearted conversations. Users are increasingly relying on it for news, lifestyle hacks, and particularly financial advice, the trickiest of them. Latching onto the demand, influencer marketing has boomed with followers running into millions. The staggering rise in markets after the pandemic has also led to the rise of this new phenomenon. The influencers, especially in finance, have a tremendous impact on an individual's investment decisions. The main content of financial influencers includes educational videos on economy and markets, stock advice, and other personal finance related advice. A financial influencer or finfluencer may not be qualified enough or a registered investment advisor to be giving advice to the public, but millions of followers still buy into the content because of the simplicity. These influencers break down head scratching financial jargon in simple terms and explain it to the layman. Registered investment advisors are authorized by the markets regulator SEBI to advise clients on financial matters. India has about 1,300 registered investment advisors. Financial influencers, although offer financial literacy to a certain extent, pose risks to individuals' financial stability. It may be through paid partnerships, advertising, conflict of interest, etc. Brands often rope in influencers to advertise their products or services. These include mutual fund investments or crypto platforms or even IPOs, where influencers review the prospectus to attract retail attention. Many first-time investors who enter the markets with the idea of making money on a whim may be vulnerable to such content from financial influencers. That is not the case with the registered investment advisors, as they are required to disclose any conflicts of interest with the regulator. The rise of influencers has created a regulatory dilemma for the Securities and Exchange Board of India with a growing investor base in the country. As of September quarter this fiscal, India has about 102.6 million demat accounts. About 41 million unique investors invest in mutual funds as of March this year. Currently, there are no regulations from SEBI that apply to financial influencers. However, the Advertising Standards Council of India, a voluntary self-regulatory organization, prescribes that upfront and prominent disclosures must be made by influencers on brand collaborations, advertisements, paid partnership, or sponsorship for all such posts on all platforms. It also directs influencers to follow due diligence. The ASCII guidelines are not legally binding on influencers. There has been some decline in violations by financial influencers, specifically with regards to promotional content on crypto assets. In FY22, there were a total of 415 instances of violations by influencers and celebrities in finance and cryptocurrency related content. Of this, 43 were finance related, while 372 were connected to cryptocurrency promotional content. In the first half of the current financial year, ASCII has observed a total of 71 violations in such cases, 15 being finance related, while 56 were on cryptocurrencies. The rampant nature of investment advice flooding social media has caught regulators' attention worldwide, whose hands are otherwise full already. In an increasingly digital age, according to a survey by a digital marketing institute, 70% of teens trust influencers more than traditional celebrities, and 86% of women use social media for purchasing advice. According to a Business Standard report, SEBI is considering ways through which such influencers can be brought under the regulatory net. According to an official, the regulator is trying to find a solution whereby at least those who are cashing out by giving advice on social media are brought under the regulatory ambit. Earlier this year, SEBI cracked down on celebrity advertising for cryptos. SEBI said that no prominent public figures, including celebrities, sportsmen, should endorse crypto products, and the advertising disclosure should also talk about possible violation of laws. However, it is tricky to clamp down on thousands of financial creators who churn out content on a regular basis, although other countries have brought out some form of regulation. In Australia, influencers could face up to 5 years in jail if they provide financial advice without a license. Similarly, the European Securities and Markets Authority issued a public statement on investment recommendations made on social media, clarifying the definition of investment recommendations, how to post them properly on social media, and laying out the consequences of breaching the EU market abuse regulation. Regulators in China and Singapore have also slapped curbs on promotion of cryptocurrency related products and issued guidelines for influencers.
Yes, Akash, I believe that it is high time to regulate these financial influencer. given that typically the people who are consuming these advice are the first timers and people who are looking to make quick money based on these advices. It is important that the people who are acting basis that advice are aware about what is the underlying research or underlying content basis where the financial advisor, financial influencer is giving you an advice. Say it is going to be a difficult task even for a SEBI, but given the nature of these transaction having an influence on the market, there need to be ways and means way the technology is evolving. I'm sure even the regulator is trying to catch up to the technologies to find ways and means to regulate these. Like typically, today we have the investment advisor regulation and the research analyst regulation, which would have a little overlap where you could try to fit these financial influencer into the ambit. There can be a not as stringent prerequisite for you to be called as a investment advisor or a research analysis. You can have a little truncated version of those rules and regulation which are applicable to them for the financial influencer as well, so that they can sort of self-register and self-regulate them.
Experts say influencers, despite promoting financial literacy, pose certain risks to consumers as seen in the case of crypto meltdown. The guidelines around influencer marketing are also evolving in various jurisdictions. In India too, influencers have caught the regulators' attention. From the creator's perspective, there could be collaborations with domain financial experts to reduce risk.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.